Good morning, ladies and gentlemen, and welcome to the Stobart Group interim results for the 6 months ended 31st of August 2020. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and could be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Simply type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Warwick Brady, CEO, and Lewis Gertwood, CFO of Stobart Group Limited. Good morning.
So welcome to Stobart Group's interim results for the 6 months to the 31st of August 2020. The 6-month period under review today has been one of the most tumultuous in recent history. Never before has commercial aviation sector been shut down globally for this long. Likewise, construction stopped for months. Naturally, such massive global events have had an impact on our operations. Today, we plan to set out what those impacts have been, what actions we've taken, the resulting financial performance, and what our strategy is to rebuild. But before I do that, I'd like to quickly remind those new to the company what it is we do and where our value lies. Stobart Group has two core divisions, an aviation and an energy division. Stobart's aviation main asset is London Southend Airport. This airport represents the medium to long-term value for the group, and post-COVID it has the potential to become a cash generative and valuable asset. Stobart Energy takes waste wood from the construction industry, turns that waste wood into fuel that it then supplies to biomass plants across the UK. This business is cash generative with long-term contracts, high barriers to entry, and under normal conditions has high margins. We believe these infrastructure-like characteristics will be attractive to a potential buyer. Within 18 months, we aim to realise value for shareholders from the energy business. Doing so will generate cash that can help fund the next stage of the airport growth and deliver a high return on capital. Stobart Air and all of the non-core portfolio assets that we hold will be sold. That will leave a business focused on a valuable London airport. We will now talk you through the challenges arising from COVID-19 on slide 3 of the presentation. The global pandemic and the resulting government actions taken to curb the spread of COVID have had a material impact on our operations. As the first UK lockdown took effect, London Southend Airport closed its passenger operation from late March until late June, although our global logistics operation continued throughout. The airport reopened, having put in place enhanced COVID secure passenger experience. However, passenger numbers stayed low as a result of the UK government's decision to put in place a rolling quarantine measure, often at short notice. This policy significantly impacted passenger confidence to book holidays outside of the UK. As a result, airline load factors fell significantly. In response, airlines already suffering from the cost burden of initial lockdown period took the decision to cut flight capacity. Airlines have also closed bases across Europe as they look to further ways to cut costs. easyJet closed 2 London bases, including its long-established base at London Southend Airport. The initial lockdown period also led to a pause in construction work and the closure of household waste and recycling centres. Despite the reduction in the availability of waste wood, our biomass plant partners still required their contracted volumes of fuel. Stobart Energy therefore had to deploy a range of actions to meet its contracted volumes. Doing so impacted operating margins in the short term. COVID-19 also impacted our investments, and as a result, we now need to take significant action to resolve the challenges arising from Stobart Air and Propius. Those businesses and the liabilities attached to them had previously been transferred into the Connect Airways consortium as part of the acquisition of Flybe. Sadly, Flybe was an early victim of the COVID-19 pandemic and its impact on forward bookings. Flybe and the Connect Airways entered into administration as a result. This led to uncertainty regarding the future of Stobart Air and Propius. Stobart Group is a guarantor for various obligations of Propius following a sale and leaseback of aircraft arrangements which we entered to in April 2017. We reviewed all options available to us as a result of the situation and concluded that the best course of action financially was to buy back Stobart Air and Propius. This meant taking effective control over our pre-existing obligations, and we are now walking towards solutions. On the next couple of slides, I will talk you through what we did about those challenges. We set out the actions we have taken in response to COVID-19 on slide 4. We took decisive action to bolster liquidity, reduce cash burn and protect our long-term strategic objectives. Strict financial discipline is in place to manage cash and costs. We also have taken prudent decisions to reduce staff costs. We immediately utilised the UK's government job retention scheme to put on furlough circa 50% of the Stobart Group's 1,500 or so employees as of the 1st of April 2020. The board and senior leadership agreed to a 20% pay reduction, and all other non-furloughed management accepted 10% pay reductions. A recruitment freeze has been put in place since early March, and all pay awards were deferred, including the costs of living awards. We're also grateful to our supportive shareholders. In June, Stobart Group set out to raise 80 million via a placing and an open offer. Shareholders recognised both the challenges we were experiencing and the long-term value of the assets we were working to protect. Ultimately, we were able to raise 100 million via our placing and open offer, and this cash will be used to stabilise the business. We also secured an additional 40 million revolving credit facility and raised further cash for the sale of the Stobart brand for £10 million. This transaction resulted in an immediate cash inflow of 6 million. The sale of the brand means we will change our topco name before the end of the financial year. Doing so will allow for a fresh start. We divested of the Stobart Rail and Civils, fulfilling the promise we made at the time of the capital raise. As mentioned on the previous slide, we also acquired Stobart Air and Propius in order to take control of the pre-existing parent company guarantees. We will discuss the financial impact of that decision later on in the presentation and our plan to dispose of those assets. The actions taken by our operations are laid out on slide 5. London Southend Airport has taken a number of actions to reduce costs following the outbreak of the coronavirus. The airport put the majority of its CapEx investments on hold. CapEx spend will be reviewed in step with future passenger growth. However, enhanced passenger safety measures once the initial lockdown was eased. That enhanced passenger experience will differentiate our airport offering by deploying contactless technology and the next generation baggage screening equipment. The use of technology will allow us to avoid bottlenecks and provide a quick and stress-free experience that delivers confidence to airline passengers. At the outset of the initial lockdown, London Southend Airport put 50% of its staff on furlough. However, the furlough scheme came to an end in October and will now use the job support scheme. With airline capacity and passengers volumes reduced, London Southend Airport made a difficult decision to restructure its operations and regrettably made 10% of its staff redundant. The greatest single cost saving, however, came from a significant reduction in route marketing support payments to airlines. EasyJet's decisions to close its base meant that all marketing support payments to the airlines stopped. This, combined with uninterrupted income from our global logistics operation, reduced the impact on our EBITDA performance. Stobart Energy, on the other hand, had to deal with the impact of shortage of waste wood following the shutdown of the construction industry. The energy business initially used its pre-existing stockpiles. In order to rebuild those stock levels, Stobart Energy needed to reduce its gate fee. Just to explain, this is a fee it charges to those businesses that supply waste wood to Stobart Energy, so that those businesses can avoid a much higher landfill charge. Stobart Energy also imported waste wood. This is more expensive. However, by importing wood, we effectively reduce the demand for UK waste wood. Reducing the demand while supply increases gradually as the lockdown eases means we can start to increase the gate fee. Stobart Energy also worked closely with its biomass plant partners, and we plan to continue working in partnership as we work through this crisis. Now I'll hand over to Lewis to talk you through the financials.
Thank you, Warwick. I'm going to start by looking at an overview of the financial performance. The group revenue is 53.2 million, which is a 28.9% decrease on last year. as operations were interrupted by the impacts of the COVID-19 pandemic. EBITDA is a 4.9 million loss, a decrease from a profit of 2.5 million last year. Loss before tax is 77.4 million, which is largely made up of non-cash items. Net debt, excluding IFRS 16, of 89.2 million is a decrease since last year end, as the capital raise was used to repay debt. Headroom of 119.1 million represents cash of 10.1 million and 109 million of undrawn on the RCF. Next, we'll take a look at the divisional performance of revenue and EBITDA. We've adopted a new approach this year, reporting EBITDA instead of underlying EBITDA, as we continue to simplify the business and make it far easier to understand. We've also reflected an additional line for revenue and EBITDA, excluding Stobart Air and Propius. This is to reflect our plans to exit these businesses in the coming months. Overall revenue has decreased from 74.8 million to 53.2 million, and EBITDA has decreased by 7.4 million to a 4.9 million loss, excluding the discontinued business Stobart Rail and Civils, which we sold in July 2020. In what has been a challenging year so far due to the coronavirus pandemic, revenue has been impacted by the reduction of passengers at LSA, dropping from 1.2 million to 0.1 million, and the tonnes supplied in energy going from 0.7 million to 0.6 million year on year. However, due to effective controls and measures taken to protect the business, EBITDA has been less impacted. Despite a 21.6 million decrease in revenue, EBITDA is reduced by only 7.4 million. When we exclude the Stobart Air and Propius businesses, the revenue reduction is 26.8 million, and the EBITDA reduction reduces to 6 million at an unprecedented time for the group. Looking at the results, excluding Stobart Air and Propius, in line with the previous slide, EBITDA is minus 3.5 million. Depreciation is in line with the prior period at 10 million. Net finance costs, including cash interest of 2.7 million, payable on leases and debt. Non-cash items are net 0.1 million, which includes a number of items such as swaps and foreign exchange. Loss before tax is 16.1 million, compared to a loss of 15.5 million last year, which is only a 0.6 million reduction year on year, despite the greatly reduced activity in the two core businesses. This is a key consideration given the clear impact on COVID-19 has had on those businesses. This is assisted by the reduced airline marketing costs this year and also the introduction of the global logistics business, which commenced in October 2019. Loss after tax is 15.2 million, which is largely non-cash. Including the Stobart Rail and Civils discontinued business, the total loss for the period, excluding Stobart Air and Propius, is 26.8 million, of which 23.6 million is non-cash. Moving on to slide 9, now looking at Stobart Air and Propius. The group purchased Stobart Air and Propius on the 27th of April 2020 after Connect Airways entered administration. This acquisition was necessary for the group to take control of pre-existing obligations, which we highlighted at the time of the acquisition. Cash consideration of 0.3 million was paid, and there was a further 2 million due in December this year. There is also a further contingent consideration payable of up to 6.25 million based on the equity value achieved upon disposal of the businesses. A non-cash loss of acquisition of 55 million arose. Stobart Air has been severely impacted by the COVID-19 pandemic restrictions within Ireland. In this table, you can see the results that have been recognised in the period post-acquisition, compared to the results for the prior period, which were not consolidated into the group but have been included here for reference. Flown passengers in this period were 11,000 compared to 832,000 this time last year, which is essentially a 99% reduction in the flown passengers year on year. Moving on to slide 10, non-cash impact. On the right-hand side of this slide, you can see a reminder of the 8 impairments that were made at year-end, which totaled 104.7 million. On the left-hand side, you can see that we have one item in this interim period of £55 million. This is the non-cash loss on acquisition of Stobart Air and Propius that I mentioned earlier, which we knew would arise upon the acquisition. We took action at year end to de-risk the balance sheet, and we continue to take steps to simplify the business. Moving on to slide 11. Here you can see the EBITDA bridge without the impact of Stobart Air and Propius. Now we're going to overlay Stobart Air and Propius so you can see the results including these businesses. This bridge now shows the results for the group, including Stobart Air and Propius, starting with the EBITDA of minus 4.9 million from slide 7. Here you can see the impact that Stobart Air and Propius had on depreciation, finance costs and the loss on acquisition, the majority of which are all non-cash items. Loss before tax, as we saw earlier, was 16.1 million for the period without Stobart Air and Propius. This has increased to 77.4 million with Stobart Air and Propius included, which as you can see is mainly due to the 55 million loss on acquisition. Loss after tax is now 76.5 million, and including the Stobart Rail and Civil's discontinued business, the loss for the period is 88.1 million, of which 82.2 million is non-cash. Moving on to slide 13, movement in cash net of drawn RCF. This chart shows the movement in net debt when considering only cash held and the amount drawn on the RCF. The opening balance of 65.2 million comprises 75 million drawn on the RCF and 9.8 million of cash held. We successfully generated net proceeds of 91.1 million from the equity raise in June 2020, of which the majority was used to repay the RCF. Cash proceeds of 6 million were received from the sale of brands to Eddie Stobart. A further 2.5 million is receivable before 1st of December 2020, and the remaining 1.5 million to be received by us within 36 months of the sale of the brands. Repayment of debt, including interest and fees, totaled 16.7 million, and this includes our leases on properties and equipment in the core businesses. The cash spent on Stobart Air and Propius of £15 million is funding for those businesses and the cost of acquisition, net of fees and cash acquired. Including the other smaller movements, the closing balance at 31st of August is much improved at 0.9 million, which comprises RCF drawn of 11 million and cash of 10.1 million. The current RCF is for £120 million, which gave headroom of 119.1 million at 31st of August 2020. We are operating comfortably within covenants and expect that to be maintained through to year end. Moving on to slide 14, balance sheet. Here we take a look at the balance sheet where the net liabilities of Stobart Air and Propius of 68.3 million have been presented separately. This is because they are now consolidated into the group following acquisition, but were not part of the group at year end. Assets held for sale reduced by £10 million following the sale of brands to Eddie Stobart, as disclosed at year end. Loans and borrowings reduced as the RCF was repaid following the capital raise. Other liabilities reduced as a balance owed to Propius was reclassified as intercompany and repaid via funding to Stobart Air and Propius post-acquisition. Other liabilities also reduced as provisions were released following the acquisition of Propius and liabilities were disposed of with Stobart Rail and Civils. Gearing has decreased from 228.4% to 216.8%. Excluding the impact of IFRS 16 and Stobart Air and Propius, gearing reduced more significantly from 147.1% to 49.8%. Moving on to slide 15, net debt, excluding IFRS 16, decreased from 159.1 million at year end to 89.2 million at August. Including IFRS 16 obligations for the group and Stobart Air and Propius, total net debt is 223.7 million. The most significant movements were the inflow from equity raise, which was used to repay the RCF, and the impact of Stobart Air and Propius as they required funding in the period and have significant IFRS 16 lease obligations. At 31st of August, the undrawn amount of the RCF was £109 million, which along with the £10.1 million of cash held gives headroom of £119.1 million. Moving on to slide 16, performance against plan announced at the time of the capital raise. I'd like to update you on how we're performing against that plan that we did announce. London Southend Airport has seen reduced cash burn as passengers returned ahead of plan. Tight cost control, investment deferrals, reduced marketing support and logistics income are all supporting increased resilience at the airport. The airport is able to scale up quickly when normalised schedules return. In Stobart Energy, we took the decision to secure supply by holding stock, but the increased market demand has impacted gate fees in the short term. We expect gate fees to continue to recover in the new financial year. Stobart Air has been impacted by delays in flying from continued COVID-19 restrictions. All areas are being managed tightly and the focus is on the Aer Lingus franchise discussions, preparing for exit and reducing the cash burn. We now expect the return of flights to be January 2021 at the earliest. Let me hand you back to Warwick, who will take you through our 3 strategic priorities.
We set our strategic priorities on slide 17. The significant challenges created by COVID-19 have resulted in establishing 3 immediate strategic priorities. Our first priority is to rebuild passenger numbers at London Southend Airport. Our ability to do this is predicated on 3 things: the recovery of the London aviation market, the recovery of low-cost carriers, and our ability to attract low-cost carriers to our London airport. We have a unique position as we provide a low-cost base for airlines while offering similar revenues per passenger to other airports. We will also look to develop further logistics opportunities, given these allow us to diversify our income streams. Our second strategic priority is to recover our gate fee income within the energy division, and we are already starting to see come through. And our third priority is to exit Stobart Air. We'll be disappointed if we don't successfully exit by the end of this financial year. You can see pictures of our global logistics operation on slide 18. It's worth spending some time on our logistics operation at London Southend and potential for growth there. The key thing for the period under review is that we have been able to enjoy uninterrupted income. We are now 1 year into operation. During that first year of operation, we have handled 25.4 million passengers and provided an efficient service that has resulted in 99% on-time departure record. This basically means we've been the best performing UK site for our logistics partner. This efficient operation could lead to more opportunities. We could seek to undertake further operations with our existing partner or a new additional partner at London Southend. We could take proven expertise developed at London Southend and apply it to working with our logistics partner at other sites. Or we could seek to establish a logistics operation at Carlisle Lake District Airport. There are a lot of options to explore. We share our expectations on the London travel market on slide 19. We believe that people will want to return to travelling as soon as possible. Going abroad for summer holiday is ingrained in our national psyche. London is the most populated city in Europe, and therefore there is a huge volume of people seeking to use London airports. We also believe that people will continue to want to come to London. After all, pre-COVID, London was in the top 3 most visited cities in the world. We have set out our expectations drawn from IATA and CAA data. As you can see, London passenger numbers starting to recover next year and get back to pre-COVID levels around 2024. I think the key takeaway from this slide should be that we don't actually need a large share of the total departing passengers in order to deliver our growth ambitions. As you can see from the bar chart on this slide, we only need a small market share relative to other London airports in order to deliver a profitable operation. Also, in circa 3 years' time, there'll be far fewer airport peak time slots in the capital. You can see our expectations on low-cost carriers on slide 20. There is no question that airlines are under huge pressure at the moment, but we believe low-cost carriers will recover first. Low-cost carriers will focus their fleet on serving major hubs such as London, and they will likely use cheap pricing to stimulate a desire to travel. Low-cost carriers also tend to base operations at Luton and Stansted and London Southend, which means we should be well positioned into any improvement in volumes. We believe that London will be one of the first travel markets to recover and that low-cost carriers will also be the first airlines to recover. We therefore set out on slide 21 our belief that London Southend Airport can utilise its London location and its low cost of operation to attract these airlines, and that our strategies align. London Southend Airport has an 8.2 million catchment area. Train times are comparable to other major low-cost carrier airports such as Luton and Stansted. We have proven routes that have been historically flown, achieving very high load factors. We therefore believe our ability to offer proven routes within a valuable London market and provide secure slots at a low-cost base will be attractive to airlines. So, how do we plan to go about securing these airlines? We set that out on slide 22. We have already touched on our enhanced passenger experience. We are seeing passengers choosing London Southend as part of their preferred airport, given there are trains from London every 15 minutes and we have fast queues and the ability to get passengers through the airport quickly and easily. We are continuously building our relationships with airlines. Across the group and the airport team itself, we have people that have previously worked for EasyJet, Ryanair, IAG, BA, Gatwick and Luton. We are very focused on who we are targeting. Our best opportunities to continue to be Ryanair, Wizz Air and EasyJet, but we're also talking to other low-cost carriers, short-haul and regional airlines that fit our profile. We believe that all airlines will be focused on their cost base and that gives us an advantage in terms of offering a base for operating proven routes at a low cost of operation. I think the key, however, is that we have a proven track record of bringing in new airlines and building passenger volumes, having gone from circa 800,000 passengers in 2017 to 2.1 million in 2019. Moving on to slide 23. We are confident that we took the right decisions for Stobart Energy to protect the longer term value of its operations and has started to see an improvement in gate fees. As you can see on the chart, on this slide, the volumes of waste wood fell significantly between March and April of this year. Gate fees had been softening as they typically do in winter months. We would have previously expected gate fees to then start to improve between May and October. However, gate fees fell further between March and July, reflecting the fall in available waste wood. Waste wood supply then recovered in June and July, and gate fees started to follow with a gradual improvement from July onwards. Importing some waste wood allowed us to take pressure off the demand within the UK. As a result, October gate fees and volumes are showing an improving trend. As you can see on slide 24, we've also remained focused on realising value from Stobart Energy as a maturing, cash generative and stable business over the next 18 months. COVID-19 has hampered operations and financial performance in the short term, but not materially impacted the prospect of longer term cash flows of a business that's generated an EBITDA of 15 million last year. The key for Stobart Energy is that landfill is increasingly not an option for disposing of waste wood due to the significant cost. We expect landfill to close as an option over the medium term following environmental legislation. We already process around 20% of the UK's waste wood. This means we are of strategic significance to the UK's CO2 emission targets. A strategically significant business with long-term contracts and high barriers to entry is likely to be of interest as we work to identify potential parties interested in this business. We set out on slide 25 the immediate actions we are taking to seek an exit from Stobart Air in the near term. The first step has been to reduce costs and cash burn. We have negotiated rate reductions with key suppliers, took the difficult decision to make significant numbers of staff redundant, put in place temporary pay cuts and used the Irish furlough scheme. We are also engaged in a competitive tender process in order to agree a 10-year franchise with Aer Lingus. A reduced cost base, renegotiated lease arrangements and a franchise agreement with Aer Lingus will make Stobart Air a more attractive proposition. Stobart Group is in an active discussions with a number of parties interested in acquiring our stake in Stobart Air, and we'd be disappointed if if we have not exited that business before the end of our financial year. Slide 26 is a slide that we plan to provide an update to shareholders on an ongoing basis. We have set our strategic initiatives and the progress that we have made since the capital raise in June. So far, we have put in place an enhanced passenger experience focused on safety at London Southend Airport and disposed of the loss-making rail and civils business ahead of schedule. Our next priority is to exit Stobart Air. We then plan to realise value from Stobart Energy. Doing so will allow us to invest in London Southend Airport. It is also worth reminding you that we still have 40 million of non-core assets that we will look to sell opportunistically. Completing all these strategic initiatives will leave a focused, debt-free, valuable airport and aviation business well placed to deliver shareholder value. In conclusion, on slide 27, I think the key points I'd like to leave you with are these. The logistics income and the reduction in airline marketing payments mean that London Southend Airport's cash burn is now minimal. We are well placed to benefit from the recovery in London's short-haul leisure travel market once the restrictions ease. Stobart Energy is already on the road to recovery with gate fees on the way up. The key is to dispose of Stobart Air and Propius, and we'll be disappointed if we don't achieve that in this financial year. Overall, we have liquidity in place to stabilise the business, a clear strategy and valuable assets. We firmly believe our strategy to move to a pure-play airport and aviation services business over the medium term can deliver superior shareholder returns.
Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. But just while the company take a few moments to review those questions investors have submitted already, I'd like to remind you that a recording of this presentation, along with the copy of your slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. Lastly, before I hand back to Warwick and Lewis, I'd like to remind you that your feedback is important to the company. Immediately after the presentation has ended, you'll be redirected for the opportunity to provide your feedback in order the company can better understand your views and expectations. I know I haven't given you perhaps a greater amount of time, guys, but if I could hand back to you, if you could just review some of the questions that we've had during the event and respond to those where appropriate to do so. If I could ask you to read out who the question is from and the question itself, that would be fantastic. Thank you very much.
Great, thanks. It's Warwick Brady, the CEO. So firstly, I obviously just like to apologise for a few minutes delay at the beginning of this presentation. We had some internet connection issues, I'm sure caused by the US elections. So anyway, apologies for that. Just to sort of very shortly, just again to sum up again. So I think the first half, I think the performance has been actually pretty solid given this unprecedented event. We've conserved cash, we've lowered costs, we've utilised government support. The energy business is operating at 86% of the volumes it was year on year. The aviation business, obviously passengers were down 90%, but obviously the EBITDA in the aviation was actually improved year on year. And of course, we raised 100 million, having gone out to raise 80 million. So I think good performance actually for the business. And again, our three strategic priorities is obviously to divest of Stobart Air, get the energy business generating bottom line profit, and of course, getting the aviation business working and getting passengers through London Southend Airport. So we'll now move on to questions. And the first question was from Rob B. Energy, are you still importing waste wood or have you reverted to the UK sourcing? And the answer to that is we still continue to do some importing, circa one load a month, just to try and balance the supply and demand of the UK wood. And we'll continue to do that probably throughout the winter to make sure that we are delivering and supplying the requirements by the plants. Next question was from Martin B. Shrewd move to buy back Stobart Air and Propius. Has this meant this is extinguishing of the corporate guarantees? How much was this exposure and how much is left? So very short answer is we bought back Stobart Air to mitigate our legacy liabilities of Stobart Air and Propius. They've not extinguished yet. However, we are obviously, as we've laid out, in negotiation to sell Stobart Air, and which will be part of mitigating our long-term liabilities. Marcus S. If talks fail regarding the sale of Aer Lingus franchise and the franchise is sold on by IAG, what is the cost to Stobart Group? So in short, Stobart Air has the franchise till December 22, and we have valuable slots that we own, and we're operating that franchise till then. So that's all we can say at the moment. Abby R, what do you see as the greatest risk to the execution of your 3 strategic priorities? So I think the world around us is obviously uncertain with COVID. I think the aviation industry has been devastated by COVID. I think that's probably our greatest risk in terms of when is the restart. Clearly, key to that for the airports and the airlines is pre-departure testing, which we're lobbying hard to make sure we have a coordinated approach for in the UK and Europe. I'm handing over to Lewis to answer some other questions.
Next one is from Paul H. Why is wood supply to plants below management expectations in July and August? Shortfall is circa 20,000 tonnes per month. Essentially, we've been working closely with all of our energy plants to make sure that we supply and manage the supply during the course of the summer. So we've been in situations where there's been planned maintenance or movement of maintenance to ensure that that supply is consistent. So that's why you're seeing that shortfall versus the original expectations. The next question is from Martin B. £40 million on non-strategic assets is noted. Is this the likely realisable value? I think that where we are is that we've said that we will dispose of these assets over the next 2 to 3 years, and therefore we want to ensure that we maximise the value from those assets. So at year end, you saw a number of impairments. So I think they are real on the books at the present time.
And then there's a note from Paul, a question from Paul H. Has the legal dispute with the buyer in the last annual results been settled, and what was the outcome? So just for clarity, that was one of our big plants, and yes, we have an agreement on that plant, and that'll be disclosed when that's appropriate. The next question is from Rob B. LSA Cargo. What are your expectations for the peak season? Presumably no capacity issues. How much of the 13.5 million of aviation revenue is cargo? So firstly, the cargo continues to perform, or logistics and cargo continues to perform strongly. We expect clearly that the Christmas season will be as busy as usual. Clearly, there are some Brexit risks associated with post-Brexit and how that all plays out. And of course, as well, you know, we do not disclose our breakdown of the revenue in the aviation business. Right, and then the next question is from Stuart R. I believe the intention of the group is to drop the reference to Stobart reconfusion with Eddie Stobart. Is that correct? And if so, when? So we have announced the sale of the Stobart brand, and what we have outlaid is that by the end of our financial year, we have announced a new name for Stobart Group, and that will obviously create much less confusion with Eddie Stobart. Right, next question from Paul H. How much stock is on hand today versus storage capacity of 100,000 tonnes? Does the company expect any shortages over this winter with this new lockdown? Right, and then of course, I'll come back to that question in a minute because I'm going to wrap it up with the next question from Neil B. Hello, can you elaborate on how Stobart can control gate fees when these are market related and subject to basic supply demand fundamentals of the market? So in terms of the storage, we've got circa 100,000 tonnes of storage. We have a very high stock levels, similar to our stock levels last year, if not slightly above. So we're in very good shape for the winter, and we're obviously supplementing that in terms of risk by some importing of the wood. And in terms of the next lockdown, so subject to obviously the recycling centres not being closed, and our expectations from the information we're getting from government that recycling centres will not be closed, the recycled wood would continue. So we expect the the energy business to continue to perform as expected, as long as those recycling centres remain open. And in terms of the gate fee, we are at 20% of the market in terms of providing recycled wood to these big plants. So we're quite a big player, and the supply and demand dynamics actually are in our favour, and we expect those will be returning to the previous year's gate fees. And then over time, gate fees are going to go up simply because obviously the landfill regulations are going to obviously reduce landfill. And then of course there's nowhere else for that recycled wood to go, so gate fees will continue to go up, and we've seen that as well across the industry. There's another question from Stephen C. Do you have any view on what we should expect air traffic at Southend to recover in 21-22? Not asking for a forecast, but just some broad thoughts on what we should be thinking about. So I think when you think about London, we've obviously done quite a lot of work on the IATA numbers and the CAA numbers. I think London is expected to be an early returner in terms of the post-COVID world. It's the largest travel market, obviously, in the world. It's the largest populated city in Europe. London Southend is very well placed in terms of its lowest cost of operation, plus its obviously connectivity to London. They're expecting, obviously, a return to some flying next summer, and then we expect to be back, I think, to be reasonable levels in 2023. And then I think even the growth of London Southend will be also predicated on there's still going to be capacity constraints as soon as all of that market comes back in 23, 24. Right. Right. Paul H. Will the energy division be sold in one chunk, or could it be disposed of piecemeal? So again, what we said on the energy business, we are going to look for value creation for shareholders, and we're looking at all options. Right. Another question from Barry F. Hi. With media speculation in the Irish Independent regards Stobart, how far apart do you think you and IAG are a deal? So just to remind you, Barry, and everybody, that Stobart Air operates at its own commercial risk. We provide a very, very good service to Aer Lingus and IAG. We've been doing so since 2012. The airline's actually been going for about 20 years. We provide a great customer service. NPS scores are in line with the IAG, if not above, on some months. So there's nothing not to like about what we're offering IAG and Aer Lingus, which is great operational performance, and we're taking, and that business takes the commercial risk. We have some real interest in that business because it's uniquely placed strategically, because it owns slots and it provides valuable connectivity into Ireland for Aer Lingus. Neil B, what value do we expect to realise for Stobart Energy? I think what we're going to say there is, we put out an RNS last year in terms of an independent valuation, which is in excess of 200 million. However, it's all about what creates the best value for shareholders, and we'll obviously be coming back to the market when and if that happens. Right. Rob B, lockdown 2. Do your statements on strategic progress reflect this new lockdown? Thanks. So I don't think our strategic priorities have changed. Absolute clarity. Stobart Air, dispose of that. Energy, continue, and obviously regrowing the traffic at London Southend. Right, we've covered, yes. So there's a question from Neil B on waste wood demand of the UK has exceeded supply, but I think we've answered that on previous questions.
Thank you very much. Thanks, Warwick. Thanks, Lewis. I think you've pretty much addressed all those questions you can from investors. And of course, the company will be able to review all questions submitted today by investors, and we'll publish those answers on the Investor Meet Company platform where appropriate. Warwick, perhaps I could just ask you to wrap up before we redirect investors to give you some feedback.
Yeah, listen, again, thanks very much all for attending. Again, we're very pleased with the performance in terms of the cash and the cost control. Clearly, we've obviously got the aviation industry's got significant challenges, unprecedented. Doesn't change our position. We have very clear priorities: dispose of Stobart Air, rebuild that energy business in terms of specifically on gate fees, and of course work with the airlines in terms of rebuilding traffic back at London Southend, and we're well placed to do that from a cost base. So that doesn't, nothing changes from there. And also on top of that, we're obviously well capitalised, having raised 100 million over the summer.
Fantastic. Thank you very much, Warwick. Thank you, Lewis, for updating investors today. Can I ask investors not to close the session, as you will automatically be redirected for the opportunity to provide your feedback. If you've accessed the meeting from the website itself, the feedback page will appear in front of you in just a few seconds post the end of the webinar. If you accessed via the link sent in an email, you'll be asked to log in and just submit your feedback, which only takes a couple of seconds. Much appreciated by the company. On behalf of Stobart Group Limited, we'd like to thank you for attending today's presentation. That concludes today's event. Thank you and good morning.